Hi, this is Joe Rabil with Rabil Stock Research with your Daily 5. In today's segment, I'd like to show you a few sector charts that I send out on my weekly report and then provide an individual stock idea inside each one of those sectors. So we're in a time right now where we've got a pretty bearish sentiment out there. The numbers seem to reflect that people have gotten pretty bearish in the near term. We've also got some sectors that are getting pretty overdone on the downside. And so I wanted to focus on two of those sectors, and then I also wanted to focus on one sector that's been very strong. And I want to show you how I use the individual sector action to help identify and where to be interested in individual stocks. So the one thing I'll tell you about this Daily 5 is that you're actually getting 6. I've got 3 sector charts and 3 individual stocks. I couldn't figure out another way to do it, so we're going to get 6 today. So anyway, I want to start with consumer discretionary. And so the chart that I have here, it is a daily chart, but it goes back 4 years. And you can see the price action and how we broke the uptrend, and we have worked our way and made a lower high and a lower low in this consumer discretionary area. Now, at the bottom, I've got 2 charts. One scale is showing the short-term positives inside of the consumer discretionary area, and the second are the long-term positives. And I'm using the large cap stocks for these component lists. And what this means is there's only 8% of the stocks right now that are in consumer discretionary that are short-term positive, have short-term positive trends and momentum. And then there's only 13% that are both that have long-term trends and momentum in place as well. And so when I see this, when I see we get both short-term and long-term deeply oversold or in a deep oversold area, what I want to do is go find the stocks that are holding up really, really well. And it doesn't mean that I automatically want to buy them, because what I'm actually looking to do is I'm looking for the short term to tick back to the upside on this review. And what that's telling me is that some of the stocks that have been down are starting to turn their trends. If we can see the stocks that have broken, that are down, find support and start to turn around, then you can go and find the stocks that didn't break down. So we were looking for the ones, the very few that are still short-term positive, and really more importantly, long-term positive, and looking for signs of a turn in the group. So that's kind of the concept here. So with that, let's go ahead and go with this first chart. So I've got Autonation in here, symbol AN. I've got my 4 charts up because I wanted to show how well this has held up. If we look at this move, look at the strength of the rally on the monthly chart, and then we pulled back and found support at the 100 level, right at a rising 18-month line with really good momentum characteristics based on the ADX. And then notice during this corrective pattern, we had a decline and then a rally back up and then a move back to the downside, an ABC decline. And notice how the ADX and the red DI, which is the strength of the sellers, is not showing any strength whatsoever. That's telling me that the sellers are not very strong here. And now we've already seen a move back up through both moving averages. What I would tell you is if we get any kind of a little dip or pause here, and actually you could consider buying it right now, but what I'd like to see is improvement in the sector. And if we saw some signs of some of the worst performers starting to show strength, this is a stock that I would say could perform exceptionally well, because it's really been submerged underwater by the group. And the moment they kind of lift that up, I think this could really pop. So that's something I think I would be on the lookout for at this point. Let's go to our next sector, which is energy. And now I have another sector that's down and out. But what I wanted to point out in the energy area, this has obviously been a strong area. It's really one of the few sectors that has held up. But one of the key points here is that in the near term, the short-term momentum and trends have pulled back. And notice how the percent of stocks that are short-term positive has dropped from almost 100% down to 50 in the short term. And so this 50 level can be really important, especially when there's no budging on the long-term trend. So the long-term trends are bullish, and now we've worked the half of the charts down on their short-term charts. And what I've noticed is the 50 level can be very important, something to be on the lookout for. So I wanted to bring this up and take a look at a stock inside that area. So let's go ahead and go with TNK. Now, I mean, if you look at what's taken place here, look at this huge base that has developed in TNK, this Teekay Tankers. And I know that there are some really, really strong trends in place, like stocks in the energy area that have been going up, 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 and away. But I like to focus on new emerging relative strength patterns. And notice what the relative strength is doing. Look at what this relative strength line is doing versus the S&P. It's really started to kick in here this year, and this line is showing dramatic outperformance. Also like to find patterns that are emerging out of a base. So we have emerging relative strength, and we have a price breakout out of a basing pattern with good momentum characteristics. So I think this is the type of thing you want to be on the lookout for, especially now that we've gotten a little bit of a dip in terms of what's taken place, or what I call a little bit of a correction in the energy area. Let's go ahead and look at the final sector, which is technology. Now, I mean, I think it's crucial to understand that right now technology is in a downtrend, and we could literally draw this downtrend in place like this. And I would say this is the same thing for the consumer discretionary and how I'd look to play this. Notice this is down to 7%, the short-term positives. And when we get down to these levels, you want to start looking at the stocks that are holding up. We're also getting at a pretty deep level of oversold on a long-term basis as well. What's missing is the move to the upside. We need some sign, at least on a short-term basis. I mean, the longer-term chart is going to have a harder time turning up, but the short-term one, we want to see improvement in some of the short-term trends in technology. If we see that, then I think you can go and take a pretty hard look at individual stocks that have been holding up and holding their trends. Now, the way you could play these are just for short to intermediate term moves. We could be in the midst of a bear market. Obviously, in the technology area, we are in a bear market, and certainly in the NASDAQ, it qualifies. But instead of trying to decide how long this bear market's going to go, take a look at the individual stocks, try and take advantage of them from a short to intermediate term standpoint, and recognize that there's probably going to be resistance overhead when we get a move to the upside in some of these stocks. So let's go ahead and look at the third stock that I wanted to highlight today in the technology area this time, which is AVGO. If you go and take a look at the relative strength, so look at this relative strength line. Now, this relative strength line is versus the S&P chart. This isn't versus technology. If you look at it versus technology, it's even better. So we've got stocks certainly in the semiconductors that have taken a little bit of a hit. Obviously, when we look at the XLK has really been pounded here, but we've got some pretty attractive features taking place. Notice on this chart, on the weekly chart, we've made a pullback, a lower high, and now we're making a higher low in the price chart while we're making a lower low in the MACD. And notice how there's no sign of selling strength in here. Red DI cannot get above 25, and we have a low ADX condition. So what I would typically do is just draw in my trend line on this chart. Just go ahead and draw a trend line in because we're above the zero line. We're not showing a lot of strength at the downside. So I'd be looking for the first sign of improvement. Now, the only caveat to that is I want to see improvement on the sector chart as well. So if AVGO is taking out this trend line and we're still seeing the majority of tech stocks going to new lows and not showing any signs of a reversal or any signs of buying strength, then you got to be a little leery about this. But if we get signs of selling climaxes to develop where a lot of volume takes place and reversals take place off the low, and it looks like we're making a bottom and we get a trend line break in this stock, that's really where I think I would be focusing in on. Stocks that are doing this inside of technology, especially while we're in a position where we look like we've made a climax low or at least a reversal off the bottom in technology. So that's, I think, how I would handle some of these areas. A couple pretty good ideas, I think, to keep a very close watch on. So that's the end of your Daily 5. I hope you enjoyed this segment. You can contact me through LinkedIn or find my research on rabilstockresearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple time frames, I have a YouTube channel and a book called Invest Like a Pro, which delves into this subject. Have a great trading day, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.